Hi everyone. Right, okay, we're going to get underway. So thank you very much to you all for joining us today for the inaugural Accentuate by K3 Hub event, which is brought to you by members of the K3 Capital Group PLC, which is a diverse professional services group listed on London Stock Exchange. My name is Marie Wadeson. I'm a managing director here at Quantimer, and on behalf of the K3 Capital Group, I lead the K3 Hub. For those who aren't already a member, the K3 Hub is a membership group of about 1,500 like-minded professionals, which is growing by the day. K3 Hub offers its members a range of benefits, including a CPD and training program, which offers a range of structured CPD courses delivered on our behalf by Tolly. It also contains a series of unstructured CPD training courses, of which Accentuate by K3 Hub is one such course. Our members can access the broad range of professional services offered by the members of our group, and for certain types of work, we are able to pay a referral fee in return. I am delighted today to be joined by a number of colleagues from across the K3 Capital Group who will be providing a series of bite-sized market and technical updates for you. I'll introduce each of them as we work our way through the itinerary. Finally, I am delighted to welcome our guest speaker for today, Shane Lucas of AVN. AVN offer a fusion of coaching and training delivered by experts to assist in transforming professional practices into rewarding businesses. Shane has very kindly agreed to run a 9-part mini-series for us, and we'll be speaking at this event on a monthly basis. So before we get underway, a few pieces of housekeeping if I can. So we would encourage you to ask questions of our speakers as we go. To do this, you can use the Q&A functionality, which you can find at the bottom of the screen. We'll cover your questions either during or after each of the individual slots. If we do run out of time and don't get to cover all of your questions today, what we'll do is we'll come back to you with a response following today's session. So without further ado, we've got a very full agenda for today. So I'd like to introduce you to our first speaker, which is my colleague, Maxine Reed-Roberts. Maxine is a managing director at Quantimer. She's a restructuring specialist and a licensed insolvency practitioner with almost 20 years experience of advising the management teams of stressed and distressed businesses. Maxine also leads the firm's personal insolvency centre of excellence. Maxine, over to you.
Oh, it's so scary when you say 20 years experience, isn't it? It seems to fly by. It's quite similar to the pandemic, really. What an 18 months it's been. So this is just a whistle-stop tour around some of the restructuring and insolvency updates, some of the insights as to what we're seeing. And yeah, as Marie said, feel free to pop questions on the Q&A, and hopefully we'll have time to get to them. So first things first, obviously it's in the press a lot that furlough is due to end on the 30th of September, which is scarily in just 14 days time. 1.6 million Brits are still on furlough at the moment, still making use of that scheme. The furlough scheme has obviously protected millions of jobs since it was incorporated 18 months ago. Prior to that, if you'd have said furlough to somebody, they'd have thought that you were meaning furlonged and perhaps didn't pronounce it right. But the interesting thing is, obviously, there's been a rise in unemployment. The Bank of England and many institutions anticipate that that will continue to rise as we go through, as we get beyond the 30th of September. It's the ideal time for businesses to make decisions and have a look at their staff and their overheads and see whether or not they need the cost that they have. Obviously, we're just 2 weeks to go until that finishes. If businesses still haven't had a chance to look at it, then there's no time like the present to get cracking with that. Obviously, remembering the fact that if they have 20 staff or more, they'll need to go through a consultation process. What we're finding at the moment when businesses are coming to speak to us that have done this exercise is that the redundancy cost is what's actually toppling them over. And there's a scheme that isn't widely known about. Not many other insolvency practitioners are aware of it and speak about it, but the Redundancy Payments Service, who are the ones that process claims when liquidations happen or administrations, they offer a scheme where you can make an application for the cost of the redundancy to be funded by them on essentially an interest-free borrowing. You have to be able to show that you've not been able to get funding elsewhere, so rejections from banks or funders. but there isn't a timescale. It's not a kind of set 12 months you have to pay it back. It's done on a case-by-case basis. So if you're advising businesses or you're speaking to owners that are having this problem, then I did write an article on this. It's on our website, but by all means pick up the phone or ping me an email and I can send you more details. With furlough coming to an end, obviously Hmrc they have a furlough fraud task force, and just some stats on that. Almost 80 billion worth of emergency government-backed loans, which includes furlough, have been paid out during the COVID crisis. And figures as at the 30th of June this year are that over 6,000 inquiries into suspected overpayments due to error or fraud have been made. More than 12,000 investigations are ongoing into the use of the support schemes, and there have been some arrests and winding up applications made as a result of those. The figures aren't staggering in terms of arrests and winding up applications, but they are happening. And as they're coming to the end of dealing with furlough, we expect that those inquiries will start to ramp up and we'll start to see a lot more of those. There are concerns amongst directors who have used the furlough scheme about the investigations that Hmrc might be making. And obviously, if there have been claims that are legitimate, then that's completely fine. The task force is there to look at those that have used the system fraudulently, carried on employing people whilst also claiming the furlough monies. One thing to be aware of, if you're not already, is the Revenue's joint and several liability scheme that they have, whereby they can make an application to hold directors personally liable, even though it will have been the company that entered into the scheme. They can make directors personally liable, joint and severally. So it's not just directors who have taken an active role in making the furlough claims, it's all directors that sit on that board. So as we hop across to the next slide, we have the end of the temporary measures coming. So as you'll no doubt be aware that obviously there is a stay on the issuing of winding up petitions, and that's due to lift at the end of September. So from the 1st of October, you can issue winding up petitions. However, there is still the protection in place for rent that was due in the COVID period. Winding up petitions won't be able to be issued if that's what the claim is for. Helpfully, they're going to define exactly what that means in 5 or 6 months' time, in March 2022. It applies to commercial landlords only, but businesses should obviously pay their rents where they are able to do so. So it's not to help cash flow where people can afford it, it's for businesses that actually can't. The one thing to just touch on, which has passed us now anyway, but was the suspension of the liability for wrongful trading. So this is where during COVID, normally wrongful trading applies, where business owners continue to operate a business and they know or ought to have known that the company wouldn't be able to return itself to a solvent position and they've made the losses worse. There was the ability to potentially hold directors personally liable where they breached their duty. There's a misfeasance claim. During COVID, they put a pause on that so that directors could carry on trading, because in a pandemic, who really knew where we were going with that? So, but that's lifted. So as of the 1st of July, the wrongful trading provision is back in play. So hopping to the next slide, if we can. We have in place, whilst the winding up petitions are able to be issued now, there is changes in place or coming into play for protection for small companies. So basically, winding up petitions are normally able to be presented where the debt is above £750, and now they're changing it from the 1st of October, so you can only issue winding up petitions where the debt is more than £10,000. The idea behind that is to help businesses get back on their feet, but particularly help smaller companies trade back to financial health. And particularly, they think that the ones that were hardest hit, so high streets, hospitality, etc., will be the likes that will benefit from this new protection that's coming in. And what it does is it stops them being able to issue a winding up petition, but also means that the creditors need to seek proposals for repayment from the debtor company before they can actually issue a winding up petition. So it's not just the fact that the debt is due, they have to have tried to have got some proposals for how the debt will be repaid, and that will be in place until the 31st of March. Next slide. Just a little note about what further assistance there is out there. a HMRC time to pay arrangement is something that's been in place for a very long time. However, there is no time like the present to make arrangements with HMRC to pay debts back over a period of time and over a longer period. We've all been through the times where HMRC were very strict on what they wanted paying and how quickly, and it was generally 6 to 12 months. We are seeing time to pay arrangements that are much, much longer, and it's the most flexible that we've ever seen HMRC be. So if you are speaking to business owners or advising businesses that have, and tax is a big pressure point for them, do speak to HMRC, who will be more than happy to try and assist. I've just mentioned there again about the redundancy payment scheme. It is something that's not widely known about, so people can make use of that. And then there's still the normal options, you know, with the loans and overdrafts from the corporate bankers, company banks. And then further options are available, private equity funding, etc. And I'm sure that Holmes is going to touch on that when he speaks later. So just popping on to the next slide, thank you. So obviously we can't talk about the last 18 months without also mentioning Brexit. And I think the quote from John Springford, which is just on the right of the screen, is really appropriate. You know, not just the pandemic, we've also been dealing with Brexit, which has kind of gone slightly under the radar because all the news and focus has been on COVID. And it's been the perfect storm. You know, we've had the end of the freedom of movement between the UK and the EU. Businesses not being able to rely on cheap labour. They've had to recruit within our borders, and that's if they can actually find the talent that's needed. Plus import tax going on top of prices of products generally, and particularly if goods are made outside of the EU. And there is real uncertainty and not much clarity when you're buying products from outside of the UK either. I don't know if anyone else has come a cropper with that, but I certainly have. And added to which, we've got supply issues as well. So not being able to get the goods, as well as not being able to get staff from outside the UK. Staff shortages is a big issue, as well as products. But I guess it's time for us to focus on upskilling those that we already have if we can't actually get people back into the UK to do the jobs that are needed. And the impact of that is the confidence in the UK has taken a bit of a bashing, and our GDP rate is yet to return back to pre-Brexit levels. And just some stats that I found from the decision maker panel was for the first quarter of this year is that the economic activity was weak. Many companies have already completed job cuts and employment intentions are improving, but companies' costs have increased. Limited impact on prices so far, but I'm sure that that's to follow. And then just having a quick look at some insolvency statistics. I'm sure everybody loves a bit of bedtime reading, so this is a favourite of ours. But it's interesting to see what's happened this year in that following quarter one into quarter two, we've had a 31% increase in the number of corporate insolvencies. But it's really easy to see and helpful to see that the government support has been useful to those businesses. The number of insolvencies dropped off last year. There were no creditor petitions, which means or limited creditor positions, limited creditor pressure, but that also means that there's been no urgency for directors. So directors that would normally come and speak to us and get some advice and guidance hasn't been the same in recent months. And the risk is that those zombie companies, dare I kind of come up with a phrase that was bounded around in 2008, but those zombie companies are still out there, but the numbers are increasing. And we're seeing the construction industry, accommodation, food services, etc., are the ones that are starting to come and get advice and take advantage of the processes that are out there. And just a quick look at personal insolvency statistics. Obviously, Marie mentioned that I head up our personal insolvency team. So whilst corporate insolvencies is going up, personal insolvency is going down. Again, no creditor pressure coming equals no pressure to make decisions, but it also shows the support that's been out there from creditors. So again, that same kind of aggressive stance that some of our lenders would have previously taken has massively tapered off and been a massive help for the individuals out there that are struggling. One thing that we are seeing an awful lot of is cases or clients whereby the business has a director's loan account where a director shareholder has carried on drawing dividends despite the fact that there haven't been profits out there, and particularly with COVID is where we saw quite a few come a cropper. So we're giving lots of advice at the moment to directors out there So feel free to pick up the phone if you have any yourself. The next slide just touches a little bit on the breathing space. So there's a debt respite scheme that started in May 21. There's two schemes, a standard and a mental health breathing space scheme. And basically what it does, as long as the individual meets the criteria, it gives legal protection from creditor action or bailiff action for 60 days. It freezes most interest and charges on debts. So the standard breathing space scheme gives 60 days cover, but the mental health one lasts as long as the person's mental health crisis treatment, plus an extra 30 days for as long as their treatment goes on for. So there's just a bit of information on that there. The main thing is that they need to be unlikely to be able to pay their debts or repay them in full. But it gives them an opportunity to negotiate with creditors, liaise with creditors without having that pressure of legal action, particularly if that is pending. And then my last but not least slide is, what does the future hold? Well, you know, I'm sure we'd all like to know. Hopefully it's no more lockdowns. We're finding that retailers are struggling to keep shelves fully stocked, especially with Christmas coming up. Our households normally spend a third more than usual in December, and the stocking up starts now. But actually what people are finding is the shelves just aren't full. And that's the issue with Brexit, and particularly combined with the pandemic as well. Fast food chains, of course, we saw McDonald's couldn't sell milkshakes. Was it Nando's didn't have any chicken? Wetherspoons didn't have any beer. I mean, you know, could it get any worse? Global shortage of goods being manufactured, so construction materials, computer chips have hampered builders and car makers. The wait now for a new car is 6 to 12 months, which has massively pushed up the price on second-hand cars as well. The demand is outstripping supply, which means shortages and higher prices, similar to what we saw with hand sanitizer, which was like £20 for the world's smallest bottle at one point. And further rises on inflation are predicted from the Bank of England. Cases are going up, but hopefully lockdowns won't be happening the way that we've seen them before. But on the plus side, there's still options for businesses. There's so much support out there. If businesses are in trouble, the earlier that they speak to somebody like us, the better. There's more options with formal and informal restructures. There's opportunity for investments and entrepreneurs. So I would direct you to our corporate finance and K3 corporate finance teams. And more support than ever, particularly when you compare to pre-pandemic times. So the future really isn't bleak, and hopefully we'll all be driving home for Christmas. I guess we're yet to see what happens with that. But if you're out there buying a new car or a second-hand car, expect to pay more or wait longer. If the cost of fuel goes up, then you know it means that the cost of presents goes down, and that's even if there's stock out there. So that's it. That's my update for you. I don't think I have any questions. So obviously I've baffled you all or stunned you into silence.
No, Max, I do have one question for you actually. So in the slide that's on the screen at the minute, you touch on a number of sectors. Now, I guess if we turn the clock back, say 18 months to the beginning of the pandemic, those sectors that were sort of the most adversely affected by the pandemic were widely reported on, so retail, F&B, etc. In respect of those, so it's a twofold question. So in respect of those sectors, what are you seeing now? And in respect of other sectors, obviously we've got a wide range of advisors on the webinar today. Which sectors should we be monitoring more closely in your view?
So definitely what we are seeing, so we've seen a lot of food and beverage in recent months coming through, where they've gone for restructures or just actually closed down. They haven't been able to pivot their business. So that's kind of cool time on them. Construction as well, we're seeing a lot more so of over trading, where actually in the case I was talking about where dividends have been continued to be drawn, but the business hasn't been there. Directors or businesses are now struggling to actually have the funds to be able to go out and buy products if that's what they can get, and also then meet customer demands as well. So definitely that food and beverage construction side we've seen quite a bit. In terms of looking forward, I think one to watch is aviation and travel. You know, we've seen the doors opening, and people starting to move around a bit more. But TUI cancelled a bunch of flights. Yesterday there was an announcement that they've cancelled a lot of the flights that were due to go to even green list areas, because people just aren't booking. They're so cautious about potentially booking and then losing a holiday again. So I would say that kind of travel sector is one to watch at the moment.
Very good, thank you very much. Well, by way of a whistle-stop tour, that was very detailed. Thank you very much for that. Moving through our agenda then, I would like to now introduce my colleague Carl Holmes to you. Carl is a managing director in K3 Debt Advisory. Carl has a wealth of experience of working on deals with values ranging from 500k to 350 million across the full range of financial products, which will include asset finance, invoice discounting, asset-based lending, overdrafts, revolving credit facilities, and many, many more. In addition, he's worked on specialist finance deals such as property and financial sector funding, and also project finance in the renewable sector. Carl, over to you.
Thank you very much, Marie. Thank you for that introduction, and good afternoon to everybody. So what I'm going to do this afternoon is briefly look at the background to the current debt environment, going all the way back to the global financial crisis, which I'm sure not many of you want to be reminded of, and then explaining how that's impacted on the landscape prior to the COVID pandemic, the impact of the measures that were introduced during the pandemic, and then what I think is going to happen as we come out, although nobody has a crystal ball, just my best guess as to what we can do going forward in the current debt environment, how we think it's going to change. As Maxine's highlighted, a number of the points will cross over with her presentation regarding the government measures and how they unwind, but a few other things as well to raise for your attention. So the global financial crisis over 10 years ago now, but there were two major conclusions that came out of that failure of the system, and that was that the major lenders were too interconnected and that on the whole risk was underpriced. This led the Bank of England to change their policy in terms of the way that they wanted the markets to be run, and they diversified away from a handful of too big to fail providers, and that's resulted in a change in the capital regulations and policies, actively discouraging the larger lenders from taking risky lending on. And from an SME perspective, unfortunately, size is inherently risky. What it has done is opened up a new cohort, numerous smaller shadow banks and financial institutions, private debt funds, family offices, who have come into the debt market. Now, the benefits of this approach can be seen actually from the fallout from the collapse of Greensill. It was a significant provider of supplier finance, but the reality is that the failure, which led to problems for the Gupta Finance Group, who were their major customer and also their major user of the services, and it was a problem for a former prime minister. But on the whole, for the market, the debt market, it has a fairly muted effect, and that demonstrates why the bank wants lots of smaller providers rather than 5 or 6 big providers who can get into trouble. So size, as we've said, is inherently a risk. The problem being that smaller companies generally, and everything is a generalization, they have fewer resources to manage the business and build and hold cash reserves. They have fewer resources to process the critical information in a timely fashion, to deal with unexpected problems. Now, that is a generalization. Many small businesses are very well run, but the larger lenders in particular are very process driven, and they don't have the time or the inclination to drill down into the qualitative differences between one small business and the next. And so as a result of that, the larger banks, the clearing banks in particular, have been much more reluctant to extend or offer facilities to new customers, and frankly been difficult in terms of getting a change of facilities in existing customers, unless those customers are performing very well. And that's great for the top quartile or top decile or whatever it is of customers that they are keen to retain, but it makes life more difficult for the majority of SMEs that don't fall into that bracket. Just as an aside, I was interested to see that the All-Party Parliamentary Group report recently, Scale Up to Level Up, highlighted the problems with the systemic problems with unprovision of funding for SMEs. That's not something we want to discuss in detail, that report, in this presentation, but it is perhaps worth reading if you're interested in that topic. So we've seen that the diversification has worked in terms of minimizing the fallout of the failure of some of those businesses, but it does have downsides. One of the major downsides is that the scale of lending from the large clearing banks was huge, and it's difficult to overestimate how much them taking a step back creates a vacuum for lending, which a lot of other smaller lenders are coming in and trying to fill, but they don't have the infrastructure, they don't have the same resources or capacity. And crucially, they don't have the ability to cross-subsidize. So the banks essentially had the infrastructure, the plumbing, if you like, to support cash transmission. Cash transmission is a very profitable part of banking. It's no risk, and it generates hundreds of millions of pounds in pure profit. That allows them, or did allow them, to cross-subsidize effectively the deals for smaller businesses, in the same way that you can get a very cheap super saver ticket on a train if the train's already going and they need a few people on it. It's a similar sort of theory, that the banks were able to provide lots of SME lending, which was effectively cross-subsidized. As that has gone away, what we've seen is lots of people are coming in and happy to lend to the SME market, but prices are going up. There's no doubt about that. So small lenders, fintechs in particular, have got lots of advantages. They're very flat management structures. They usually have fantastic high-tech systems that allow the transfer of information very quickly, very easily. They can do all their bank reconciliations and account transfers very quickly and very easily, much better, in fact, than a lot of the high street banks, despite their investment in their digital platforms. You can speak to the decision makers and they generally feel much more engaged, but they are smaller. They have, to a degree, a lack of capacity. If you're dealing with a smaller lender and there are 2 or 3 other people who have got a better proposition, then you're likely to be pushed down the chain, and that may lead to delay and to frustration. They have a limited access to capital, so that it may be that actually they don't have the funding available. We've seen 1 or 2 transactions derailed by the need for the funder to go and look for additional funding from their own perspective, their own balance sheet. A lot of these lenders will look to upscale. So you're talking to a lender about borrowing, say, £3 million, then they decide they want to set their floor at about 5 million, and you need to start the process again. And it's difficult to maintain a long-term relationship with a business that's looking to move up the food chain like that. And of course, the major problem is the cost of capital. The high street banks and the clearing banks and the larger institutions are able to use deposit funds to support their capital, and that obviously is much cheaper than when borrowing money from other lenders or investors. So there are a lot of debt providers out there, and they're all busy, and lots of them are chasing the same deal. That's the summary. So moving on to the support measures that were put in place during COVID. These are the points that Maxine has already raised. There were the grants, the money that you're not expected to pay back, the furlough scheme, the rates rebates, the self-employed scheme. There were the long-term loans, and the important thing to remember, of course, about the B bills and the C bills, and to and the C bills and the B bills, is that the first 12 months was capital holiday, so you didn't have to make a repayment. So a lot of people are now coming up to the stage where they have to start making the repayments, the capital repayments on there. That's being replaced. They've all been replaced, as you're probably aware, by the recovery loan scheme, which is less generous in terms of the capital holiday, and that scheme runs out at the end of December. So the big question is whether we think that's going to be continued. We'll see what happens there. And then again, as talked about by Maxine, there have been certain measures taken which have made it much easier for companies to bump along, things like HMRC deferral, HMRC time to pay schemes, the inability of landlords to evict, the inability of people to take court action. So these have all been very encouraging, very supportive of businesses that have been in financial difficulties or have liquidity issues, but they're about to unwind. And as they unwind, the particularly if you have working capital requirements, then a C-bills or a B-bills, although it's a long-term amortizing loan and you've got a lot of time to pay it off, you've got to find that cash over and above the cash you need to fund your business on a day-to-day basis. So where are people going to find the money from? Well, a lot of companies have been able to save money over the course of the pandemic, and a lot of businesses have a lot of cash reserves. Obviously, they aren't people who are going to be struggling to find debt and to make the payments that we're talking about. The main banking provision will be from asset-based lending or cash flow lending. But if you're a business that doesn't have the assets or the quality of earnings in order to generate either asset-based lending facility or cash flow lending facility, then you're going to have to be looking for private equity. Whether that's going to come from the traditional private equity providers, or we're going to see development of patient capital, is one of the questions I think we'll be asking ourselves in the next sort of 6 to 12 months as to how that new funding mechanism might develop. So moving on to the funding options that are available to you, to a great extent, which is the most appropriate will depend on your own business model. So if you've got annual recurring revenues, subscription revenues, very clear visibility in terms of the cash flow coming in, and you have good profits and good cash generation, then you can look at a cash flow funding scheme. If you have good invoices, lots of stock, and a great deal of plant and machinery, then it may well be that asset-based lending is a better option for you, even if you are generating profits. And that, to a degree, will mean looking at your own business model and understanding how your cash is generated and how your assets sit on the balance sheet. Businesses that have a subscription service and get paid up front are no good for asset-based lending. Businesses that have a blue chip debtor book and 90 days credit because their customers don't like paying are very good candidates for invoice discounting. So when we're looking at asset-based lending, is for invoice discounting and stock finance, and then plant and machinery finance, and possibly even property finance on top of that. The key points in terms of understanding what you're going to be able to generate from those facilities is the valuation and the exit strategy. So the asset-based lender will look at what those assets will realize in a cease-to-trade scenario in the vast majority of cases. In that case, generally a fast-moving, well-run debtor book will generate a good loan-to-value and a good recovery, but slow-moving, high customer concentration, lots of disputes, lots of post-sale conditions, guarantees, warranties, liquidated damages will cause that loan-to-value to fall. Stock has been very badly affected by the reintroduction of preferential creditor claim, which has impacted on floating charge assets. P&M and property, I think it's relatively well understood. I'm not going to go into too much detail now. Moving on to cash flow, it says there are 7 steps. I'm going to tell you what they are. The main thing is being able to demonstrate to the lender that you've got a clear understanding of how your cash is generated and that you've got good quality of earnings. Be able to fully explain the business performance over the last 3 years, obviously including the impact of COVID, whether that's good or bad. You need to have a very clear understanding of your funding requirements. You need robust forecasts, which are prudent, include provisions for all the downside risks you can think of, which will include the unwind of furlough. If you've got people coming back, are they going to be productive? Do you need to pay them off? Those kind of thoughts. What's happening with your national insurance? Rent payments, do they need to be brought back up to speed? Supplier payments, which may have been allowed to drift out, are you going to have to restore your payment terms? So that's on the forecasting of the cash out side of things. Your assumptions in terms of revenue, your assumptions underpinning sales growth must be very credible. Banks look to see something that's incremental rather than exponential. If you're changing direction in terms of your sales growth, they want to know why. So if you're selling, sales are going up slowly and suddenly you're anticipating they'll go up very fast. If your sales are going down and you're anticipating they're going up, then that takes a lot more explaining than if you're going along with a straight trajectory and continuing to do so. Once you've established what it is that you're looking for in terms of facility, Then you want to be able to have a sensible conversation about what's the best structure, what debt you really need to be having in terms of headroom and liquidity, and who are the best people to be able to provide those facilities for you. We would highly recommend using a debt advisor for those situations, not least to be able to give you a professional, objective view of what your forecasts are saying and to test those assumptions and to make sure that they're sufficiently flexed and sensitized. And once you've got a facility in place in terms of making the debt work for you, the key thing is making sure that you keep your lender fully informed of what's going on. Transparency and treating your lender with great respect isn't going to guarantee that they'll give you a fair hearing if things go wrong, but it gives you a much better chance than if you've kept them in the dark. So generally regard them as a key supplier and treat them in the same way as you would as someone who's critical to business from that side of matters. Okay, as far as I can see, I don't have any questions either. So I am going to throw the floor open now and see if any emerge.
Oh, yes, actually, I do have some questions for you. What government support, if any, can we expect to see once the recovery loan scheme ends at the end of this year? Yeah, so the Enterprise Finance Guarantee Scheme was in place prior to COVID. It was suspended when B-bills and C-bills were put into place. It is still suspended. I would be very surprised if it doesn't come back or something very similar to it doesn't come back. The main limitation on the Enterprise Finance Guarantee was that it was restricted to £1.2 million worth of borrowing, and the British Business Bank would guarantee up to 80% of that. Obviously, that's a relatively small amount. I would hope that next year they will reintroduce it with a higher limit, which will make it more applicable to the sort of larger end of the SME sector. Thanks, Carl. And just one more. I've had a question which reads, is patient capital actually available? Probably not in the sector that we're addressing on this webinar. There are large fund institutions such as Legal & General and M&G who are starting to look at putting their capital, and obviously their pension funds, so they've got very long-term aspirations in terms of return. They're starting to look at putting capital into construction projects and clean environmental projects. One hopes that direction of travel will continue, and they will start looking at direct to corporates. And as they start looking at direct to corporates, the level at which that will feed down to will start to come down into certainly the lower mid market. I suspect there'll be a more of a sort of basket of lenders doing that on a portfolio basis rather than direct lending. But it is something that I think will be encouraged and hopefully will come to pass, because I think patient capital is going to be a very important part of the framework of helping businesses recover from COVID. Great, thank you very much for that. Right, so now we move on to our final market update today. That comes from Nigel Langrick, who joins us from our fellow K3 Capital Group member and one of the UK's leading R&D tax credit businesses, RAND. Nigel has over 10 years experience of advising businesses on a range of taxation matters, and today is going to provide us with an update on the R&D market. So over to you, Nigel.
Thank you very much, Mary, and good afternoon to you all. So just briefly before we start the topics we're going to really look into today, I'll give you a brief introduction to R&D. I'm sure that most of you are aware of the scheme, but it might be that some of you don't have clients that make claims, or you're not necessarily sure as to what clients can make claims or what projects that clients undertake fit into the criteria. So then we'll move on to talking about the benefits to your clients and the reasons that they maybe should be looking to make those claims. And then we'll go on to look at a current issue that is kind of big in the R&D sector at the moment, and we'll back that up with a case that RAND have currently helping a client with, just to see what Hmrc are doing at the moment and the changes that they're implementing, and then we'll wrap up with some opportunities for you and your clients, especially this month being 2 weeks to the month end. There's still an opportunity for some of those clients that you have to maybe make a claim up to a deadline, but then beyond September, what else is there out there, and what can you guys be doing with your clients and be looking into over the next sort of few weeks to to help them maybe bring some more funding into their businesses. Move on to the next slide, please. Yeah, so my introduction to R&D, firstly, I'd like to say that it's a government-backed initiative. It's been around for a number of years now, and it's growing all the time. It's a way that the government see of getting money back into the economy, supporting innovation and growth in the UK, and it has cross-party support. So at the moment, we don't envisage an end to the scheme within the next coming years. I would imagine it's going to be around for a long time to come, especially as most countries in the world now are implementing one if they haven't already got a scheme in place. It is only open to UK limited companies who pay corporation tax. So all those clients that are sole traders or partnerships, we occasionally do get the odd query from someone who runs that kind of business. Well, at the moment, they are not covered within the scheme. And the companies really need to be looking to be ones that are innovative. The guidelines use the words to create an advance in science and technology. So it's those clients that are undertaking projects that maybe competitors of theirs would struggle to replicate easily. It would probably take their competitors to do additional R&D work themselves to meet a similar goal. I've just noticed some sectors there that may be worthwhile you keeping an eye out. So our biggest sectors currently are those three: manufacturing, engineering, and software. But we do see growth in the two sectors below that, construction and environmental. And in the environmental sector, what's big at the minute is trying to reduce wastage or trying to reduce energy consumption. Move on to the next slide, please. So the benefits to your client, well, ultimately it's a way to reduce their tax burden, especially at the moment where any kind of reduction in cost is going to be beneficial to companies. R&D claims can maybe reduce the tax that they've got to pay. It can maybe wipe out the tax liability entirely. So for some firms, it may be that we create a taxable loss, and then they can surrender that for additional cash that they can invest into the business. If the company is even loss making before the start of making an R&D claim, the amount of cash that can be recouped by that surrender can be quite vast in some cases. And that's a good way for clients to continue to invest in the future developments they want to implement, strengthen their growth, stay ahead of the competition, maybe take on staff, maybe diversify, move into different markets, move into different product streams. And it's something that we see a lot of clients have started to do over the last year or so, that maybe they were working in one industry and now they're looking, because they've had the time, they've not necessarily been having to work in their normal trade, that they've started to diversify. And sometimes they funded that by way of making a claim for their previous normal trade. And really they have nothing to lose, maybe just looking into the fact that they may be able to claim. It might take a couple of hours of a chat with you guys or an expert like us to just see if they qualify, when maybe previously they didn't expect that they did. Some of the industries that we see qualify might surprise people. They're not necessarily just manufacturing or just technology or software development. We have farmers, for example, that are maybe looking to do new innovative ways of growing crops or looking after their livestock. If you can move on to the next slide, please. So the big current issue that we see in the R&D world is there has been a huge change recently in the way that Hmrc are looking to police the claims. Maybe in the past, there's been a number of dubious claims that have made their way through because there wasn't maybe the checks in place at Hmrc. So from what we're hearing, they've taken on another 100 R&D officials who are going to be looking to sort of fill their case books with a lot more inquiries going forward. It's something that we welcome at RANDS, mainly because we want the claims that are being submitted to be legitimate and to be meeting the criteria, and it's going to help us understand what Hmrc are wanting, what Hmrc are requiring from us when we submit the claims, the detailed reports that we provide to Hmrc to make sure that we are meeting all the guidelines and going along with what they expect the advances to be. Previously as well, this was funded by the EU, and there was kind of a pot of money that the government had. And if they were not getting to that pot of money, maybe they were a bit more relaxed about just letting that money flow into the economy. Well, now it's going to be treasury funded. So obviously there's maybe a bit more of a limit as to what's available to the government to hand out to UK companies with regards to R&D claims and the innovation that's happening. Ultimately, this is a way of, the new 100 officials is a way of preventing abuse. We don't want to damage the scheme's reputation. We want it to be legitimate. So it's a way of them, making sure that everything that goes through, we're happy with, HMRC happy with, and meets all the criteria and the guidelines. But we do expect a lot of these officials to be more junior officials, so not the experienced inspectors that we've maybe dealt with in the past. And some of the claims or some of the inquiries that we're being made aware of are maybe very standard at the minute, and not necessarily in depth, maybe picking out a few pertinent points that they're really clamping down on. So at the moment, that's maybe just to get the caseload up. Maybe that will change in the future, but we're not necessarily sure. We've just got to wait and see on that, really. But we are definitely seeing an increase in inquiries at RAND. Talking to some of our fellow R&D agencies as well, they are actually seeing exactly the same as us. And talking to accounting firms that we partner with, we have some of them coming to us that maybe wants us to help with inquiries that has been brought across their desk where we haven't been involved previously, which I'll go on to in detail one of those in a moment. So at the moment, we're seeing that maybe it's a person that starts to use experts more and just to have that outside expertise coming to offer our guidance with regards to our experience dealing with HMRC. We have a fairly strong relationship with HMRC, and one of our directors regularly liaises with the R&D consultative committee. So we have a lot of back and forth with people who are very sort of well versed in R&D and have worked within it for a number of years at HMRC. Some of the maybe newer firms into the R&D sector, we're not entirely sure the support that they're going to be able to provide. But there's a lot of firms coming into the sector recently. We've just got to wait and see how that bodes for clients, really. And on to the next slide, please. So on to that recent case that I kind of briefly just touched on. We had recently an accountant that we partner with, we share a number of clients with, approaches one of their clients and had made a claim and it had gone straight to an inquiry. And HMRC at that point were saying that they wanted to throw out all of the costs. There was no reason why they could see to accept any of the claim. So a bit of background to the client. It is a software startup, only a small company, a couple of directors, and they've been using one external developer as well to help them out. It's sort of in the initial startup phase. They haven't realised any revenue there, so it's all costs. So it's a loss-making business at this stage. So they're one of those companies that's been able to surrender those losses to get the cash injection into the business. And that's one of the main reasons why they thought initially, let's go for making an R&D claim. Let's see what is out there available to us to help us grow and take on maybe more staff down the line. It was kicked out from our understanding because even though they're competent individuals and they know software inside out, they just hadn't put it forward in the correct way. They hadn't met the guidelines and explained the advances in technology in a way that HMRC felt fitted in with the scheme. So we got our technical experts involved. They reviewed it and they determined that there definitely was a viable R&D project there. And it was, as we previously thought, it was just that they'd not explained it very well. It may have gone under the radar in the past. HMRC may have just sort of let it through, but now there's more resource at HMRC. They're going to be catching these out more and more. They asked us if we could help them out, and what we've done is sort of rewritten the technical report that they submitted with their claim to target exactly how HMRC want us to demonstrate the advances in technology. We've submitted that back to HMRC. I mean, this is very, very early on in the case, so it's only just sort of gone out a fortnight ago. So we're just waiting to hear back from them. But we are at the moment very confident that HMRC will eventually accept that and take the claim through. I suppose the main takeaway from this is that it just shows that HMRC's changing approach and backs up our expectation. And it's probably going to become more common. We're probably going to see a lot more R&D tax-based inquiries over the next sort of year or so. And on to the next slide, please. So then just finally to round off, just quickly talk you through a couple of opportunities that you may have over the next few weeks. September is one of our busiest months around. We have obviously December year ends, they have their tax liability due within a couple of weeks. So, we try and, where possible, save our clients the tax up front as opposed to them paying it, having that negative cash flow, and then us recouping it down the line, which is, a way that we try and build that value into the client in that way by doing it up front and helping them out in that way. The second one is a 2-year deadline for September 2019 year ends. There's only a 2-year window from a year end to make an R&D claim. We have a number of clients who have maybe only just realised or considered the fact that they can make a claim, and they've come to us and they are September 2019 year end. So we're rushing to make sure that we can gather the information, make sure that they do qualify and submit that on time for them. So they are probably 2 year ends for you to maybe look into your portfolio, review your clients, see what clients you have, see what clients you maybe have maybe not considered for R&D in the past, but maybe there's an outside chance that they would be able to make a claim. There are clients that make claims in different industries than their main industry. We have engineering clients that maybe do very day-to-day normal engineering that doesn't really advance the technology, but they've made a software claim because they've implemented some new software that's bespoke to them to help with their internal functions. So it might be that it's not necessarily as obvious as on first look that there is that opportunity for someone to make a claim. You'll be surprised at some of the clients who qualify, some of the industries that qualify. And we regularly help our partnered accountants with reviewing their portfolios, either a face-to-face meeting or a Zoom call, just to help them out, point out to them what clients may actually qualify and be able to make a claim. And a lot of them have maybe done more development during the pandemic than you would think. They maybe closed down their business, maybe furloughed some staff, but maybe they kept on some high level management test team or developers, and they maybe tried to diversify into another industry during the pandemic. So they've actually been doing development on something that's maybe completely new to them, and maybe that's their opportunity, their window into making a claim. So next, I will just invite any questions if you have any. I don't see any on the screen at the moment.
Nigel, actually, thank you for that. That was very helpful. You've actually prompted 4 questions. Brilliant. So, a question from Paul here says, "Hi Nigel, I think I've read somewhere that Hmrc may take recent government COVID support, e.g. CBILS, against any R&D claim."
So I'm not entirely sure about that, but I can definitely look into it and come back to him later on. But in general, we have definitely found it more difficult since COVID to determine the relevant costs, or it's been more difficult for our clients to determine the relevant costs before sending them across to us. So something like the furlough scheme has had a massive impact on what wages are available. That is all automatically deducted. So I can only imagine that most COVID support payments will be netted off in some way of the R&D claim. But I'm happy to look into that further and get back to the panelists.
Yeah, sure. Okay, so Paul will pass on your contact details to Nigel, and he'll come back to you directly on that one. Second question. I've heard about the PAYE cap. Can you tell us a little bit more about that?
Yeah, so for clients with accounting year starting April 21, so we're not seeing their year ends past yet, but it's definitely the current year for a lot of clients. Basically, there is going to be a limit on the amount of tax credit being able to be paid out by Hmrc. So that is the situation where you have losses and you surrender those losses for the tax credit. They're going to limit that to 3 times your PAYE and NI liability for the 12-month period, plus a 20 grand buffer on top of that. So the main people that's going to affect is probably small startup companies, and those companies that do research and development tasks and projects, but don't necessarily use their internal staff. They use a lot of external subcontractors, and that cost of those external subcontractors far outweighs their normal day-to-day PAYE and NI liabilities.
Thank you for that. And a question here from John. So I've heard that there is something about having to pay within 1 year. What's that all about?
Right. So this, I think, is to do with a recent case fairly recent case, that HMRC had not tried to kick out, but they'd raised an inquiry because there was costs. So the costs had been debited to the P&L, but they hadn't been paid out by the client. So it was sort of sitting there as a creditor or as an accrual. And I think it had ultimately been building up over a number of years, and maybe sort of 3 or 4 years down the line, it still hadn't been paid. So HMRC raised an inquiry. They say, well, you've accrued for these costs, you've got them in as a creditor, but if you've not paid them, have you really taken on these costs? And the ruling ultimately has been that costs can be included in that sense, but they ultimately have to be paid within 12 months. So, if you have some creditors at the year end, as long as they're paid within a reasonable amount of time, they will be accepted. But if they're sat there for years and years and years, ultimately they should be removed from the claim.
Okay, thank you very much. And the final question here is coming from Claire. In fact, we've just had another one, so I'll come to that in a second. So how long are claims taking to be processed, and when can my client expect to see the funds coming back to them?
So HMRC are advising 6 to 8 weeks for claims to be processed at the moment, although we see claims processed within a week and we see claims processed within 3 to 4 months. It does seem to rely on whose desk it lands on the HMRC and the complexity of the claim. With regards to payments, that's something that has changed recently. So maybe a year ago, you would see the full amount of the claim coming in one lump sum, and that would be absolutely fine. But I suppose as a result of the newly reintroduced 3-year carryback rules for losses, HMRC seem to have split up the way that the claims are repaid back. So if we submit a claim, they'll usually repay tax already paid by the client initially. And then likely is that it'll take 6 to 8 weeks for any repayable tax credit. So that's those surrendering of losses to come back. And then the most lengthy repayment is the proportion that's maybe been included in a carryback claim. So where we're recouping the losses from a prior year, it seems they're looking into that a lot more, and it's going to a slightly different area of the R&D department. They've been split up into sort of different people to process the payments. So it should be within 6 to 8 weeks, but like I say, we are seeing some claims go on for maybe 3 or 4 months at the moment. But we do regularly call HMRC on those claims. We do look to chase for updates and keep on top of them to make sure that we're keeping pressure on HMRC so they don't get sort of forgotten or lost.
Great stuff, thank you. And just the very final question that's coming again from Paul. Nigel, would you just be able to summarise your fee structure, please?
Yes, so we work on a commission basis. We charge our clients a percentage of the overall claim value. We only bill when the claim has been paid out in full. Usually and obviously if usually now with these inquiries, they're being raised before the fees are paid out. But if an inquiry is raised after the total claim had been paid out and then it was reduced, we would sort of give that proportion back to the client as well.
Great, thank you very much, Nigel. Right, so I'm delighted that we are on time. So that brings us to the end of our market update sessions. We will be sending out a follow-up following this webinar, which will include the contact details of today's speakers, which are on the screen currently. So you've no need to make a mad dash for a pen to jot those down. Moving on to the next part of our agenda then. So up until now, we've had the chat functionality switched off, but that's about to be switched on, ready for the final part of this session. So without further ado, I am delighted to hand over to our special guest, Shane Lucas, who is the Managing Director at AVN, for the first of our 9-part series designed to assist you to transform your practices. Shane, over to you.
Thank you very much, Marie. And well, what a great session this has been so far. I hope that I'm going to maintain that incredibly high standard going forward on your behalf as well. If I can just ask if I can be spotlighted just to fill the screen for everybody and take off any screen shares, then that would be fantastic. At the moment, it's showing me that I am not spotlighted. So if that could just be done, that would be fantastic. Or at least let me know. You should have access to the chat box. So whilst that's happening, just say hello in the chat box. Just let me know that you're here, you're present, you're listening to me. So just looking in the chat box now, not a single, there we go. Thank you very much, Thomas. And Simon, hi there Simon. And Michael and Lucy. Hi there Marie, and Daniel and Graham, Paul. So wonderful, wonderful bunch of people already. You're straight in there in the chat box saying hello, and really grateful for that. One extra favour you can do for me is maybe just change that setting from hosts and panelists only to everybody. That way other people, thank you, I'm spotlighted, other people can see what other people are saying in here as well. You can see lots of hellos coming in. Now then, before I get started, the first thing I want to say is that I'm very much aware that it's not only accountants on this session today. My presentation is kind of aimed at accountants in practice, but that's not to say that it's not relevant to all businesses, because actually the stuff I'm going to be talking about today, we teach accountants to deliver onto the business owners that they're working with. So if you're representing any other type of industry, don't leg it, don't think this is not relevant to me, because actually it absolutely is. So look, let me just switch on my slides and I'll get started. Now a little bit later on I'll tell you a little bit more about myself, but right now let me give you a heads up as to what I'm going to be talking about in this session. So the title of this session is How to Grow a £1 million Practice per Partner whilst working a 3-day week. Now let me know in the chat box yes or no. Does that have appeal? The fact that you're still here suggests that it does. But just give us a yes or no. I want to say I love interaction in the chat box, so do interact with me. Let me know. I've had a yes with 3 exclamation marks already, but that's the only one. So thanks, Graham. At least you're interested so far. So come on, everybody. It's only 3 letters or 2 letters you've got to press. So okay, great stuff, fantastic. Now look, in the next 60 minutes, my promise to you is that I'm going to be sharing with you 3 steps of a proven blueprint on exactly how you can achieve that kind of success in your practice. Now, success is different for everybody actually, isn't it? Because for some of us, let me just shift, there's a Zoom related item just pops right up in front of me and it's quite distracting. Here we go. Success is different. I mean, it's really quite a subjective term, isn't it? We all have a different idea of success. And for some people, wherever their current situation is, what they see now as being success, as they get closer to it, that goalpost changes, doesn't it? And they want more or they want different. And so right now, just give me a flavour. I'm just going to share with you a few befores and afters of people that we've worked with recently. And let me just emphasise, by the way, the examples I'm giving you here are single partner firms. We work with multi-partner firms, we work with up to 23 partner firms, ranging from 0 to 35 million. But the examples here I'm giving are just sole practitioners, just because you can see the impact that's had on them. And then if you're a multi-partner firm, I want you to times what you see by that many partners, just to give you a flavour for the type of impact that you could hope to achieve within your business. So example A, and I want you to tell me which kind of resonates the most to you. Now, example A is Phil. When he first started working with us, he was turning over just 50k a year. He'd actually left a job where he was earning much more than that. He got a mortgage based on a salary much more than that. And he got himself into a right pickle, a Derbyshire term, working 70 plus hours a week, unable to pay the bills, and his relationship at home, it was on the brink of divorce. But actually within 4 years, he'd set his desires on achieving £1 million practice on a 3-day week. Within 4 years, he'd completely transformed that practice to achieving exactly that. And it was him doing that that really inspired me to use this as a title for my presentation. Another example is Paul. He was turning over 800k in his business. He'd got a ridiculous amount of employees, far too many for that level of turnover, 30 employees for 800k. But he'd hit a glass ceiling. He couldn't seem to exceed this level of revenue, but he wasn't making any profit with that many employees, and he was ridiculously busy. Talk about running inefficiently. But actually just within, and in his case it was 6 years, he went from 800k to what is currently still growing at an exponential rate because he's put the stuff in that I'm going to share some of with you today in this session into place, and that's just enabled this exponential kind of growth in his practice. He only participates, I mean, it says 1 day a week in there, it's actually half a day on Zoom. He'll have a leadership meeting, they'll go through KPIs, and then he'll leave them to it again. But actually, you know, success is different for everybody. Not everybody wants their empire. Jane, for example, when she started working with us, she was turning over 220k. She was working with over 200 clients. She got 5 team members in her team, but she was still working silly hours, 60 plus hours a week, and only personally taking about 25k out of that business. What she really wanted to do was obviously, for the most part, just work less hours and earn a better personal income. And within just 7 months, we captured this on, she actually started working with us in March of last year, just after lockdown kicked in. I interviewed her in December. Within 7 months, she'd gone from 220k to 160k, which sounds the wrong way, working with just 30 clients. But as you can see from the bullet points in front of me now, that, you know, she's gone from having 30 clients. In her case, she's done away with her team. She wasn't happy with them. She's outsourcing all of the compliance. She's working a 3-day week. She's personally taking 100k out of that business, and she's delivering a business advisory type solution to her clients and letting the outsourced people do all of the rest of the work for her. So just out of curiosity, in the chat box, give us an A, B or C. Which of the, and I'm looking to the side because my chat box is on a different screen, which of those kind of has the most appeal to you? Is it A, B, C, or maybe it's something else? Okay, so C in your case, Graham. What else? Talk to me, guys. Come on, it's one letter. Okay, so I've got a B there, Daniel. I've got another B. And look, there's no right and wrong here. An A. Keep them coming in. I've had 4 responses so far. We've got quite a few more people in here, so don't be shy, don't hold back. Let me know what will be closest. And again, if it's none of those, just give us a flavour for what it would be for you. And if you don't want to make it to everybody and just send it to me, that's fine as well. I won't name you if you do that. But for the most part now, we've had B's, A's, C's, so we've got a bit of a variety in there as well, okay? But most of you are striving for a B at the moment, and that's fantastic. So look, in this session, it's a very short session. My aim is to share with you several golden nuggets, but if you can take away just one of those golden nuggets and apply it in your practice, that sets you on a journey to start earning more, working less, getting much more enjoyment in your business, will staying behind in this session have been worthwhile? Give me a yes or no in the chat box. Excellent. Well, in that case, let's get cracking. Let me share with you the agenda for today. So what I'm going to be sharing as a starting point, and as Marie said, by the way, in the introduction, this is the first of 9 sessions that I'm going to be delivering for you. So this is kind of a bit of a scene setter. I'm going to talk about why most accountants aren't achieving the level of success that they could be. I'm going to talk about how you can transform your existing accountancy business into something that's going to achieve your dream practice and your dream lifestyle as a consequence of that. I'm going to share with you 3 steps of a proven blueprint to a successful practice. I'm also going to give you access to a free copy of my latest best-selling book for accountants, Putting Excellence into Practice. Obviously that's an accountancy practice. And also then we'll have a bit of time at the end for a Q&A. As long as I don't waffle too much, we'll make sure we've got time for a Q&A. I suffer this syndrome called try and give too much information and value away, and therefore we sometimes run out of time. So I'm going to make sure that I keep moving on. So look, let's begin. Now, just for fun, we're going to have a bit of a this is your life moment. Because actually we're all living our life, we're moving through chapters all of the time. So let's start at the beginning. Once upon a time, I've no doubt when you were born, you were a beautiful little baby. And as you grew up, perhaps you used to do things that were really adventurous, maybe used to take risks. Perhaps you just don't do some of those things anymore. Perhaps you used to daydream about stuff you'd love to do as you got older, the career. Maybe you want to be an astronaut, or maybe you want to be the first person on Mars, or maybe you want to be a doctor, or maybe the Prime Minister, perhaps even an accountant. And then you went to school and perhaps 99% of those aspirations were extinguished. Perhaps at some point as well you met the love of your life, but certainly along the way, perhaps you made the decision that you are going to own your own accountancy business. Whether that's to become a partner, maybe one of 10, one of 5, or maybe set up from scratch. And when you made that decision, if this kind of cup represents your capacity of life in general, you would have decided, you know what, I'm going to be my own boss, I'm going to work the hours I want to do, I'm going to take the holidays I want to, I'm going to have the life that I really desire because this is my business. And so you would have allocated a certain amount of your time to running the practice. But of course you want to have a certain amount of time to spend with your family and with your friends and on your health. But actually what I see for many accountants, in fact business owners in general, is that the needs of the accountancy practice, the needs of the business, start to dominate more and more of that life at the expense of family, friends and health. Give us a yes or no in the chat box if that's something you can relate to. Yeah, so I'm seeing lots of yeses coming in already. To a greater or lesser extent for some people, I'm sure. And some of the reasons behind this is because, I mean, not everybody does, but some accountants that I speak to make these mistakes. They don't have a clear strategy in place for what success looks like in their practice. They compete on price. They take on any client and become all things to all people. They become the bottlenecks in their practice because everything has to go through them. They don't look after their number one client. Your number one client is your own business, the accountancy business. And yet so few people dedicate a good proportion of time to focus on that business to make it better and stronger so it can better support the clients. They rely on memory for customer service, which means sometimes you remember to wow a client and then sometimes you forget, which leaves them feeling more despondent. They recruit, and I deliberately use the word staff in quotes here, that's a whole different reason for that. They recruit employees purely based on the CV and then wonder why they're not performing or fitting in, or there's morale and performance issues with them. And they allow for scope creep against the original, maybe fixed price that they agreed with them. More and more work gets done for them. It doesn't end up getting charged for, or maybe it's disputed and written off. And they also don't maximize on client potential as well. The number one reason why clients, sorry, I've said that wrong. It's not the number one reason, it's one of the most common reasons why clients move accountants is because they realized another accountant could do something that they wanted and they didn't know their existing accountant could. That's because they don't talk to them about these additional services they could offer. Making these mistakes, the situation you're in has consequences in 3 areas. 1, on time. You're at the beck and call of client demands, you're in client meetings, you're doing the client work or double checking the client work. You've got employees, but quite often they're bringing you more problems than solutions, so you're having to deal with that, that takes up time. When you're that busy, you run the risk of making errors. Customer service tends to go out the window. You don't have the time to spend with your best customers or working on the business. Technology is just changing and developing and improving all the time, and as we've just heard, so are regulation changes, and you have to commit time to keeping on top of those things, don't you? From an income point of view, many accountants out there, they're seeing their profits going down rather than up on a regular basis just because of cheap accountants out there. The cash flow can suffer. If employees are bringing you more problems and solutions, if you're not getting the returns on them, then they're costs, aren't they? You've got bills to pay, but as I say, there are cheap accountants out there. Maybe more and more you're starting to experience fee pressure and fee disputes, people thinking, well, surely that's just part of the package, you're my accountant. You're giving away more and more free advice, and it just leaves you feeling like you're being taken for granted. And for me, the most important one of all is enjoyment, and yet many people say to me, I'm just not enjoying this anymore. I feel like my employees don't care. They're happy to leave at 3 or 5 or whatever it is that they finish, but I'm the one working silly hours a week. I'm starting to get hostility from clients because I'm not turning stuff around quick enough. I'm getting hostility at home because I'm not there, or if I am there, my mind isn't. It's just unfulfilling, unrewarding. I feel like I don't have a life. And even when we do take holidays, I'm having to take the laptop, or I'm dealing with emails and texts and phone calls. Your life has gone from being adventurous as a child, going through school, becoming a business owner, to looking pretty much like this. You're just feeling like you're stuck in a rut, doing the same thing day after day after day. In fact, I've got an alternative title for it, if you'll forgive the choice of words, but it kind of feels like same shit, different day, doesn't it? And whilst that's going on, actually, the person in the mirror is getting older and older and older. We're just stuck in this rut. You know, Einstein has a great definition for this, doesn't he? Doing the same thing over and over again and expecting different results is the definition of insanity. So what is the problem? Many people think right now that it's because of this COVID pandemic that we've gone through. It's just affected it in such a way, but that's not been the real problem. It might have been the catalyst for a lot of recent change, but the real problem's been bubbling up to the surface for a long time now. If you take the old fable, you know, you place a frog in a pan of hot water, it would immediately jump out because the environment that it's just been placed in is hostile, compared to placing a frog in a pan of cold water and heating it up gently. It doesn't recognise the changes that are happening around it until it's too late. That's what's happening right now within the accountancy profession. Because we live in such an increasingly fast-paced, changing world right now, that the stuff that many accountants, and I can't speak for you personally, of course, but many accountants out there are still doing and have been doing for many years as their core service, is becoming less and less relevant in the eyes of business owners. Annual accounts, for example. From a business point of view, annual accounts don't make easy reading. They don't show you how well you're doing compared to others in your industry. They don't identify strengths and weaknesses. They don't calculate scope for improvement. They don't support decision making. It's just out of date data, whether that's months or even, you know, weeks. It's just out of date data by today's standard, isn't it? They don't even show all of the numbers that really matter to a business owner. They simply meet the needs of Hmrc, company's house, not the needs of the client. And as a consequence of that, clients don't value them very much, and therefore they don't want to pay very much for them. Annual accounts is just a rear view mirror look on the business. Now, you wouldn't drive your car forward focused purely on the rear view mirror. A business owner doesn't want to be driving their business forward purely looking at historic data. Now, I want to inspire you that you can build your dream practice and achieve some of the levels of success that I gave you a hint at earlier. Ultimately, we all have our own definition of success and our own vision for what that looks like. But at the end of the day, firms that do things differently are getting radically different results. Right now, and COVID actually hasn't affected this number. It kind of, as much as it dipped from businesses going under, new businesses have been born. So right now in the UK, 5.9 million businesses exist that are in the 99.9% of them are SMEs. But actually, year on year on year, new businesses are being born, and this trend has massively increased. It used to be fairly stable until recent years, and now that's ramping up, because to most people, setting up a new business has never been easier than it is now. They can sit in their spare bedroom at a computer, still wearing their pajamas on their lower half if they want to. They can operate on Zoom. They can tap into people from all around the world to set up websites, e-commerce, product making, whatever it is that they want to create. They can do all this easily from their spare bedroom. So more and more people are seeing the opportunity to set up new businesses. And of course, the people who are being made redundant are also seeing this as an opportunity now than trying to get another job. So there are new businesses being born all the time. However, sadly, this trend of the survival rate of businesses hasn't changed in the 23, 25 plus years that I've been working as a consultant to business owners. 56% of businesses die within the first 5 years of trading. And we still don't know really yet the impact that this COVID pandemic is going to have on those businesses, because there's still many of them being looked after by furlough. But actually there's a more serious aspect to this, because the word here is survival. Because many of those business owners, whether they're in this point or past it, many of them are just surviving themselves. They're strapped for time, they're strapped for income, and they're not enjoying it either. And do you know what? As an accountant, you can do something about this. Why you? Because I firmly believe that accountancy is a noble profession, one that can make a profound difference to its clients. But not by doing this, but by making a fundamental change in the way that they run their practice. This pyramid and the labels within it specifically represent the categories of services that an accountancy practice might offer to its clients. The bottom one here, compliance. That speaks for itself. It's your bookkeeping, your payroll, your VAT returns, your tax returns, your year-end accounts. All of those things fall under compliance. Business services. That's providing management information, so management accounts on a monthly or quarterly basis, cash flow forecasting and budgeting, all fall under the business services category. Growth solutions, that's sitting down with the client as a paid for service and providing a business consultancy, a business advisory, a strategic input on how they can grow that business in a way that's going to enable them to work less and earn more and have more enjoyment. I don't mean tax advisor, I'm talking business strategy here. And then finally, wealth strategies, wealth solutions, that is offering services such as exit planning, mergers and acquisitions, maybe some financial services such as pensions. They fall under this top level. Now, not every practice is interested in getting involved in those, but actually a growing number now are in certainly the three of these areas here. Now, why is it a triangle? Well, first of all, you can see my label on this right-hand side. The higher up the triangle, the higher up the pyramid, the greater the fee income for the services that you can charge for. And not just the greater the fee income, the more profitable they are as well. Because frankly, business owners don't value the accounts. They see it as a commodity. They don't want to pay much for it. They're going to be price sensitive and they're going to want rock bottom fees. But as long as you demonstrate the value of these services, people will happily pay a premium for them. And therefore, because you can't charge very much down here, if the majority of your income is coming from this kind of area, you have to work with a high volume of clients in order to generate the turnover, the income. Most of the practices now are making this transformation. They are going from having this as their core service. Now, they're not abandoning this, but rather than this being their core primary service, they're making this shift to making business advisory, business growth solutions their core service. And look, as I said, most of your rivals are doing this already. They're making this transition. But the other aspect as well, it's not just about how fast time is changing. Technology is also having an impact on these kinds of services. Technology is getting better and better all the time, isn't it? When I first got involved in the accounting profession, accountants would employ a junior almost full-time just doing bank reconciliation. Doing management accounts and cash flow forecasting used to be a work of art on a spreadsheet. Most of these things now, click of a button. Maybe there's a bit of human interaction, but nothing compared to days gone by, and it's getting better and better all of the time, isn't it? Not overnight, but chipping away, chipping away. Now again, I mean, I speak to hundreds and hundreds of accountants all of the time. Every year, in fact, in the last 12 months alone, I've spoken to over 500 different accountants of different practices. And many of them are of the mindset, do you know what, I will improve my practice one day. Yeah, I know I need to change. I know I've got to do something about it. You know, in 3 years' time, I'd love it to be this. In 3 years' time, I'd love it for this. In 3 years' time, 3 years away never happens, does it? We have to commit now to deciding to make a change in our practice and take the first step now as well. Now, I've just talked about that fundamental change, haven't I? From going from here to here. Let me just give you a little analogies to, you know, what that can look like. Now, I don't know your specific circumstances right now. So it might be that you're currently generating 75k per partner or 150k. Maybe it's 500k per partner. Maybe it's over £1 million per partner right now. Let's just go for a 250 just for the benefit of this example. Now, if the majority of your services or income is coming from compliance, then based on that, and let's pick an arbitrary number of an average fee per client of 1,200. Some of you it will be more, some of you much more, some of you maybe less. So we'll go for an average fee per client, which is what that stands for, of 1,200. Now, if that's the case, that works out to about 208 clients. Now, to service 208 clients, you kind of got to get some help, haven't you? Which means you've got to employ a team of people, which means your profits are often diluted by having that team, which can leave you, and perhaps your team as well, in this scenario. But actually, if you make that transition up here, many of the firms that we work with are earning a minimum of an extra 6k a year just by delivering the advisory. And that's a minimum. That's kind of a starting point. Many are much higher. Now, if you take that transition alone, then you've only got to work with 35 clients. And I mentioned Jane earlier. This is exactly her scenario. You've only got to work with 35 clients. Now you can have a smaller team to look after those. Like Jane does, you could outsource that. It's entirely up to you, but you don't have to have as much of a fixed cost base working in this scenario. And the profit element of working in a business growth solution is much greater. And the fulfillment is as well. People tell me that they love making a difference to their clients. But actually, as a consequence of that, they're able to work less hours themselves. They're able to take many more holidays. They're able to spend much more quality time with their families, as well as the business owners, the partners in the practice. I firmly believe, as I said, accountancy is a noble profession that can make a profound difference. And it really does deserve to get really well rewarded for doing that as well, doesn't it? Now you may be thinking, but Shane, I don't have the right clients for that. I don't live in the right area. You can't get those clients around here. I don't have the right team. I don't think I could deliver that kind of service. I don't think I could get my partners involved with that. But actually, many of the people that we've worked with all have those same kind of concerns. And if you check out our website, you'll find case study after case study after case study, from startups to small firms to medium-sized firms to multi-partner, multi-million pound firms that have all made those kinds of transitions and are living the dream as a consequence. So I want to inspire you that you can do it, but I want you to believe that you can. If you take nothing else away from today, I want you to believe that you can do this. It can be a lonely place in business, can't it? Even if you've got a large team of people, even with other partners, it can still feel a lonely place in business. And even if you have a vision for what you'd like to achieve, maybe you start to see a little bit of light at the end of the tunnel with that vision, but it never feels like it's getting any closer, does it? I want to share with you in this series of 9 sessions that I'm going to be going through with you, how to bring that light, or for you to get through this tunnel and start to achieve your dream practice and your dream lifestyle. Because at the end of the day, a vision without a strategy remains just an illusion. But even so, having a strategy but without tactics is also the slowest route to success. So I'm going to share with you those 3 steps to a proven blueprint for building an incredibly successful accountancy business. Now that's 3 of 7 steps. I've only got so much time in this session today, but I'll be giving you tasters as we go through the rest of the 9. Now, just before I go through these and reveal these 7 steps, I just want to share with you, if you don't mind, a very brief introduction as to myself. I know Marie said that I was from AVN, but actually I'd just like to tell you a little bit more. So yeah, I'm Shane Lucas, I am Managing Director of AVN, but actually from a personal point of view, I want to share with you my purpose, my passion, my why, if you like, what gets me out of bed in the morning. And my purpose is actually centered around the word choice. And it's specifically around enabling people's ability to make better lifestyle choices. Now, the brain is responsible for making choice, isn't it? And if that becomes injured in some way, that can inhibit our ability to make choice. So I do a lot of sponsorship raising, marathons, Ironmans, all of those types of things to help and to contribute to a charity that helps people recover from brain injury. There are people around the world, including the UK, that don't have the luxury of some of the lifestyle choices that we get to take for granted. And then there are people in business, accountants are no exception, that often feel they have no choice but to keep working an endless amount of hours just to pay the bills or just to keep the customers happy. And often at the expense of a great lifestyle with their partners, with their children, with their friends, with their relatives. And so my purpose is doing something about that, enabling for all of these areas a much better lifestyle choices. And over the years I've co-authored a number of books that really support that as well. And this is the book that I would love to give you a copy of at the end of this session. I don't just mean a digital download, but actually post it out to you as well. But you've got the option. So very quickly, a little bit about AVN. So AVN is predominantly a coaching and training organisation for accountants in practice. We're a global community. We're working with accountants all over the world now. We're a global community of independent accountants that openly share and help each other. We take them through our 7-stage roadmap, supported by a methodology called REACH. I'll mention that shortly. Now, over the past 23 years, we've served and helped and improved the lives of accountants, representing over 3,700 practices. Through those accountants, helping them deliver much more of an advisory service, then we've impacted through those accountants over 1 million businesses. I'm a huge fan and believer in giving back. We're heavily aligned with the United Nations Global Goals, and through the United Nations Global Goals we've been able to give, in fact specifically through a business called B1G1, we've made over 11 million impacts. Something I'm very, very proud that we've done as a business. And through those businesses as well that we've worked with in different parts of the world, we've collectively helped them grow their revenue by over 650 million. But actually, they're just a few numbers. For me, what's the most important thing is the intangibles. We've saved marriages. Children actually exist as a result of doing that. We've reduced blood pressures. We've enabled time on the golf course, or more time at the gym, or just getting out and enjoying the world. Yes, we've created millionaires, but ultimately we've enabled a greater sense of fulfillment for people, and we've changed lives. So that's enough about AVN. Let me get on with the main topic now. So this is our 7-stage roadmap. I'm going to reveal one at a time and just share with you just a glimpse about it. What I want to really make clear is that this is kind of the top level strategy that every business, every accountancy business, and every business that those accountants can work through, this is a top level strategy that they can use to transform their business. Within each one, the tactics will be much more tailored to the starting point, the vision that people want to put in place. So everything should start with having clarity though. Clarity about what do you want to achieve? What kind of lifestyle do you want? What kind of personal income? What kind of hours do you want to be working? How many holidays do you want to be working? Not working. what kind of business do you want to actually have that supports all of that? So with clarity, it's really important to start with the end in mind. Have clarity on what you want to achieve. From that can be reverse engineered into a business strategy to get you towards that vision. We also, and I'm going to talk through this through the lens of the way that we help AVM members, okay? So through the lens of AVM. Defining your ideal client that you really want to work with, that's going to be receptive to the types of services that you really want to deliver and enjoy delivering, that's going to pay you the kinds of fees that you really want, is crucial, because you can't market and attract your ideal client until you've defined exactly what they are. Putting that marketing strategy in place then is crucial, and that's one of the first things that we help them do. Also, you want to make sure that you're pricing profitably, so putting a value pricing strategy in place, something that represents the true value that you can give, just not the going rate that maybe other accountants might be charging. Obviously, within clarity as well, we're looking for quick wins, so we want to help people get their profits and cash flows improved, and of course get rapid gains in terms of time, personal income and fun. So how do we do that? Well, I recommend, I'm a great believer that every business owner, large or small, should work with a coach, somebody who's going to challenge them, get them think differently, challenge the status quo. And one of the first things we do, because we provide all of our AVM members with a one-to-one coach, is we challenge them on what do they really want to achieve as a vision going forward. Why is that important? What if they don't? And then really fine-tuning that so they've got some absolute clarity on what they want to achieve. My recommendation to you, if you're not working with a coach, is to get a coach, okay? The right coach though. It has to be the right coach. There has to be a values match. They have to have the right attitude that's aligned with yours, that will challenge you in the right way. They have to have a great reputation. I think a lot of coaches out there profess to be great, but actually can't support that. So prove that they get consistent results. For me, this is really important. They have to guarantee value or your money back. So use that to find out how confident they are as a coach and their ability to be a great coach. Obviously, they have to have business experience and certainly business acumen as well. There are a lot of coaches that failed in business and then decided, I know, I'll just help others not fail in business. And for me, really importantly, they have to have good coaching skills. Now, if you want to understand a little bit more about that, also on my website, you can get a copy of this book, which actually, there's a section that talks about the qualities to look for in a great coach. Okay. Now, once you've got this vision in place, that can leave your mind buzzing with, okay, I need to do this, I need to do this, I need to do this. Where do I start? That can actually cause a lot of procrastination, because actually you don't know where to start. What should you do first? So a great coach will also help you prioritize that. And don't pay any attention to this. This is just obviously made up for the benefit of my slide. But, you know, where should you start? What should you do first? And this is all based on where you are right now in your business. And then, of course, it's, well, okay, now I know what to do first. How do I go and do it in the most efficient way? Now, you're here today because you are interested and committed to investing in your own education. Yes, from a CPD point of view, and this is really important, of course, in your profession to keep up to date with CPD, but also from a business skills point of view. So few people are focused and committed to developing their business skills. How do you price your services? How do you sell your services? How do you market your services? How do you build a great team of people, a great culture? How do you develop your leadership skills? All of those types of things should also be developed all of the time. Every day should be a school day. Now, from our point of view, this is the type of training that we deliver to the people that we work with. We run implementation workshops. And I call them workshops deliberately because these aren't lecture style, they're not monologue. We're getting involved with people. We come and sit down next to them and help them work on different aspects of their business, whether it's developing an elevator pitch, whether it's developing their USPs, whatever it might be that's going to make them, get them better presented out there. And we believe that the environment that we put them in dictates performance as well. So you know, you're in a room with like-minded peers all striving to achieve something very similar, or certainly working on the same thing, you can bounce off each other and get ideas off each other, as well as the expert training from the front, and the fact that those experts will come and sit with you and help you focus through this. So this is the way that we help people, and getting that blend just right, which means that people make this stuff happen. I can't answer that question, Simon, but hopefully my hosts, the people who have invited me, will answer that question for you. Now, I mentioned reach earlier, and just for the sake of completeness, I just want to share what that looks like. So this is our support methodology, and reach comes in the form of the roadmap, which I'm taking you through right now, those 7 stages. Creating the right environment for people to be the most productive they can be. Holding them accountable via the coaching. That's not just holding them accountable, but it's acting as a sounding board, a mentor, somebody who's been there, done that, helping the people that we're working with progress. But also being part of a great community. K3 Hub, Quantuma, a great community for accountants to tap into each other and support each other. And that's the kind of environment that we create as well. And for me, the H stands for H2H, is human to human. I don't believe that we're in a time anymore of B2B and B2C, business to business, business to consumer. It's human to human, people by people. And for us, this is about hand-holding people every step of the way to achieving their success as well. So that's what Reach is about. Now, generally, when people start working with us and they go through all of the elements of clarity, within the first 3 months, they start to see massive success. So on average, and this is an average here, okay, so some are less, some are more than that, but on average, people have increased their gross recurring fee income by as much as 40% in the first 3 months. In many cases, that goes straight to the bottom line because they've not necessarily been charging enough, or they've not been charging for extra work they've been doing, and they've made up for that. Their cash flow becomes stabilised. We help them to service their clients, we help them to add more services to their existing clients. We improve their conversion rates through the training we give them, help them reduce their work in progress, and from an internal point of view, from our side of it, they're generating over 5 times return on their investment with ABM. Simon, very happy to have a chat with you about that, but obviously not right now. From a time point of view, they're improving their productivity, so that allows them to work less. They're firing some of the poor quality clients because they're getting better quality clients who are paying them much more. They're empowering their team to deliver more of this stuff, or they're embracing outsourcing, which means actually they're able to spend more time working on their business and have more family time. And from an enjoyment point of view, they're getting less hassle, more time to do what they really want to do, and more reward and excitement. So that often brings on a smile. So just a few examples of the success that people achieve within that. I mean, 3 weeks into the journey for this guy, Jim, 54k in additional income. Peter Fry, within the first 3 months, 60% increase in his revenue, 17 times return on investment with us. You know, the list goes on, and I'm not going to read every single one of these out, but you know, time and again, people are getting the results, and I'm sharing this with you so you can implement stuff. I want to share with you an action point here. I want to give you 3 actions at the very least that you can take away. I want you to identify 10 businesses. This is just one strategy if you want to take on more of the right types of clients. Identify 10 businesses in your area that you would love to work with, and put them on a bit of a wanted poster. Document them and have a reward, not a financial one, but an actual gift. And make that wanted poster. It could be your backdrop on Zoom, it can be a poster in your office. And every time your clients are in, it can be in your conference room, your meeting room. And when your clients come in and they're waiting to speak to you, they can be taking a look at that. You can come in and say, do you know any of those businesses or any like them that maybe you could introduce us to? Now, again, this is a strategy that many of our firms have put in place. This is a photograph, it's not the best photograph, of a drinks menu that one of our firms offers. So this is a poster on the wall as well as a little card that they'll give them. It's got the variety of drinks that their visitor could have, and then around the edge are the businesses that they would love to work with as well. So it's a great opportunity to say, what drink would you like? And by the way, do you want to just have a look and see if you know any of these businesses or businesses like them? So that's an action point to take away. Now, that's clarity. And clarity, as I say, the most important thing there is thinking about what you really want to achieve in your business and setting yourself a deadline to get on that journey. The next is positioning. In order to start delivering some of those services I've talked about, the positioning has to change, because many people are seen as, and I hate saying this, believe me, I'm married to an accountant, I've been married to the profession for 23 years, but most businesses out there see their accountant as that stereotype, boring, nerdy type of person. And we want to change that perception, because I know that accountants aren't like that, but many business owners still have this stereotype assumption. That positioning in the marketplace needs to change, otherwise they're only ever going to see you as somebody to do their compliance work for them. Now, accountants, I'm sorry to say, don't help themselves here. I look at a lot of websites of accountants. This is just one aspect of this, by the way. I look at a lot of websites, and as much as they visually might look different, and maybe some of these words are in different places, they all pretty much say similar things. They'll all say, oh, we're accountants and business advisors. We're not like other accountants. We're different. We're proactive. We're forward thinking. And then they all go on to say, we do accounts, we do bookkeeping, we do payroll, we do audits, whatever it might be. They're not demonstrating that they're different. They're just saying they are, but they're advertising exactly the same services. Now, from a business owner's point of view, if they're seeing multiple different websites that are all saying pretty much similar things, the graphics, the colours might be different, then from their point of view, if you're positioning yourself in a very similar way to your competition, from your potential customer's point of view, they can only differentiate on price, can't they? But if you differentiate yourself sufficiently, there's going to be a core offering that you've got in common, differentiate yourself sufficiently, then the deciding factor is around value. And that's a very different kind of decision to make. And as long as your value proposition meets the wants and needs of your customer, then they're going to choose you over and above the competition. Now, many people say to me, do you know what, I can't get the clients around here, I can't get the types of clients that be interested in advisory. Now, I can't speak for your particular client base, but what I can say is that we all fish in the same ocean of clients, and in that ocean there will be your big fish, your little fish, your bottom feeders, your quality clients, your painful clients as well. Now, if you're catching the small clients or the painful clients or the bottom feeders, just as with fishing, you're just using the wrong bait to attract the kind of clients, the kind of fish that you really want to achieve. So if you're getting the small clients and you don't want them, and I know I'm making this sound easy and obvious, but you just need to change the bait. You just need to change the way that you are attracting clients, and you'll start to get the types of clients that you really want. So positioning, really important. In positioning, we're helping people position themselves as an expert in business. We're establishing their vision, mission and values so that they're attracting, this is part of the attraction, we're helping them differentiate beyond price. We even help them become the author of their own book, to get accreditations and awards that really make them stand out. They feature in a book called the UK's Best Accountancy Practices. Obviously they have to earn the right to, but they get there very quickly. And obviously they're starting to attract better quality clients as a result. The typical outcomes are they're delivering more services to higher value clients who are paying them better fees, they're charging for the extra work, increased revenue and increased profits. A lot of the stuff we help them do is high value but low effort as well, so it's not negatively impacting on time, and they're getting a much greater appreciation, a greater sense of fulfillment, they're getting less stress, and they're able to have much more family time at home. So your positioning action point is, don't just say you're different on your website. Do a brainstorm, get your team together, get together with your other partners, and just think about how are you different and demonstrate that. Describe it on your website. Why is the way that you're different going to benefit the client? Okay? Make it more about you than us. Okay? So I just want you to take those things on board. Come up with at least 5 unique selling points. Then Google accountants and find out if any of those exist elsewhere. If they do, it's not unique. Now, the final one I'm going to share with you today is value. This is obviously delivering much more value to your clients. And in value, we help people increase their value perception. We help them add much more value to their core products so they're much more appealing and people will be willing to pay more for them. But adding much more value to the client's business as well, which starts to change the lives behind those businesses. Now, many of our members are charging consulting fees ranging from $7,200 to $30,000. For the majority, we've obviously got the extremes that are charging significantly more than that. So as I say, 3 real core areas here. The value perception, and I'll just touch on that one in a moment, adding more value to the core products and adding value to the client's businesses. So the value perception really is the perception that a potential client will have of you the first time that they discover you, right through to becoming kind of a lead and being nurtured by you in some way, getting to know you more, to having a sales meeting, to then going through an onboarding process with you, and then month after month after month after month being completely wowed by you. We help people map out this entire journey and put systems in place to make sure that that value perception is sky high and it doesn't drop at any point. Because if it drops at any point, it's very difficult to get it back up. When it stays up here, people are going to be much more prepared to pay you high fees. And of course, we help them make this transition. The confidence, the skills, the ability to deliver it effectively, the ability to sell it and charge appropriately for it. But also, you know, on lower levels as well, just measure the numbers that really, really matter to business owners and show them how they're doing on a regular basis with those really important numbers. So that's value. And as I say, with value, well, people are starting to see even more benefit in these 3 areas. They're actually packaging their services so much more effectively. They're delivering business advisory and they're generating a much higher personal income as a result. They're able to invest a lot more money in developing their team and growing their team with better quality people as well, because they've got a greater amount of money to invest in them. They're achieving a much more efficient capacity and they've got control over the hours that they're working. And again, the sense of fulfillment just continues to grow. Now, I want to give you an action point on value, and that is to create what we call a windows of opportunity chart. Now, this can be a spreadsheet, it can be a whiteboard on the wall. If you've got a lot of clients, a whiteboard on the wall isn't going to work, but a spreadsheet certainly can. And what you need to do is create a grid like this, and then along the top, list every service that you offer as a practice. Maybe you could brainstorm additional services that you could offer. On the left-hand side, list every client that you're working with. Now, if you've got different people with different portfolios, obviously each one needs to list their own clients. And then every time you have a meeting with a client, maybe they're already having some of these services, but the ones that they're not, as long as it's going to be something that's pertinent and relevant to them, have a conversation with them about, I've just caught the wrong button, about that service. Talk about the benefits to them, how it might save their time or enable them to focus more on earning more income for themselves if you were to deliver that service for them. And then maybe they'll go for that, maybe they won't. If they don't go for that, you can mark on the spreadsheet that you've told them about it. And if they do go for it, you can mark that you've sold that to them. And then every time you have a meeting with them, maybe pick 1, 2 or 3, have a conversation and just go through that process. And that's a great way of making sure that you're being proactive, you're talking about extra ways that you can help your client, they're not feeling neglected, and they're seeing great opportunities to maybe free up more of their time to concentrate on their business while you're taking care of some of the stuff for them. Okay, now just going through even the first stage, actually, people are starting to get their life back. They're starting to get the practice time under control, so they've got much more time to do the stuff they really love outside of it. And that time continues to get better, the income continues to get better, and their level of happiness continues to get better as well. Now that might beg the question, okay, so once I've got my life back under control, how do I continue to scale up? How do I grow? How do I continue to grow? Well, that's where some of the rest of the stages in the roadmap come in. And I'd love to tell you more about them, but I don't have time in this session. Okay. So look, do you see how what I've just explained to you could help you achieve your dream practice? And of course, the consequence of that, your lifestyle. Give us a yes or no in the chat box. Okay, well look, I'm very happy to hear that. Well look, as Marie said as well, I'm going to be delivering this as session 1, so we've got another 8 topics, very different topics I'm going to be sharing with you. Let me just give you a flavour for what they are. So one of them is about your mindset, because we have to accept that the thinking that got you here today can't be the same thinking that's going to get you to achieve that aspiration. We have to change our mindset. So that's one of the next ones that I'm going to be talking about, and then you'll get a different outcome. After that, I'm going to be talking to you, how do you value price your services? How do you define and attract your ideal client? I'm going to share with you what some of the UK's best award-winning 1 to 5 partner practices are doing consistently that get them incredibly high, consistently, results. I'm going to share with you exactly how to sell and deliver advisory that works with clients. I'm going to show you how you can double and even triple the productivity across your entire practice. Imagine not just you, but every single person in your practice is doubling or even trebling their productivity. What impact would that have on your business? How to develop a thriving team culture that's using their initiative, they're stepping up, they're making your life easier. And finally, how to find the time to make some of this stuff happen. So they're going to be the upcoming topics. Now, I said that I would give you a copy of my book. Let me just pop in the chat box a link that you can use to grab this book now. If you want to, hang on a minute, I've not sent that to everybody, I've only sent it to the panelists. Let me just change that to everybody and do that again. Select, oh dear, here we go, it'll come at some point, let's do that. Just copy that one in for your benefit. I've actually managed to click it myself now, so let's just do that and go back to you. Okay, so that's in the chat box. My recommendation is just click that now, but then maybe minimize it and come back to here. I want to say thank you and just ask, and I know I've kind of got a minute to go, but are there any questions? I've got a brief moment for questions. Whilst that's happening, I'm just going to make this slide in the background large so that you can see it as well. This is the contact sheet that was brought up earlier. I know I'm stood in front of it, but I will shift in a moment. Any questions? I'll just give you a moment to put any in the chat box. I'll be honest with you, it's rare that I have questions at the end of this, so I'm not going to wait too long. If you're a slow typer and you're halfway through typing, by the way, just hit the return and then carry on. That way I can see that you've got a question that's work in progress. If not, I'll make myself disappear. I'll leave you with this contact slide so you can capture any information you want or take a quick screenshot, and then we'll end this session. So first of all, I just want to say thank you very much for today. I'd like to extend my personal thanks as well to the speakers that spoke earlier today. I don't know if any of them are still on in the panelists, but I found that to be an incredibly valuable session. I really enjoyed getting those updates myself, so thank you to you guys. Thank you to K3 Hub and to Quantuma as well for inviting me to speak today, and thank you to you guys for staying behind at this hour to listen to me. Right, so I haven't seen any more in the chat box, so I just want to say thank you again. I'll make myself vanish, and then we will end this session.